Have you ever wondered how one of Latin America's biggest airlines, a company that once carried millions of passengers a year and defined Brazil's low-cost air travel revolution, ended up filing for bankruptcy in the United States? This is the story of GOL Linhas Aéreas Inteligentes, an airline that climbed rapidly through innovation and ambition, only to be brought down by debt, volatile fuel costs, and the chaos of a global pandemic. Buckle up, because this isn't just an airline story. It's a case study in ambition, leverage, and resilience in the skies. The rise of GOL, Brazil's budget airline success story. The story begins in 2001, founded by the Constantino family, who also ran one of Brazil's largest bus companies. GOL was born from a simple but daring idea: bring the low-cost airline model, made famous by Southwest Airlines in the US, to the Brazilian market. GOL entered the skies with efficiency at its core. It operated a single aircraft type, the Boeing 737, which simplified maintenance and training. It embraced quick turnarounds, low fares, and a focus on punctuality. In an era when Brazilian air travel was dominated by high-cost, full-service carriers, GOL's approach revolutionized accessibility. By the mid-2000s, GOL had captured the imagination of millions of travelers and quickly became Brazil's second-largest airline. It expanded into international routes and even acquired the iconic Varig brand, signaling its ambition to compete globally. But behind the success story, trouble was already brewing, because GOL's growth was being powered by borrowed money. The over-leveraging problem. The aviation business is capital-intensive, and expansion almost always involves debt. GOL relied heavily on loans and aircraft leases priced in US dollars, while its main revenues came in Brazilian reais, a currency known for its volatility. That mismatch created constant risk. As GOL added planes and routes, its debt piled up. By 2019, the airline's total liabilities had climbed into the billions. When the Boeing 737 MAX crisis hit, forcing airlines worldwide to ground aircraft, GOL's operations suffered yet again, but even that was only a prelude to what came next. The pandemic shock. In 2020, the COVID-19 pandemic hit the airline industry like a hurricane. Borders closed, travelers disappeared, and revenues evaporated almost overnight. GOL's passenger numbers fell by more than 60% in a single year. The company scrambled to stay afloat, cutting staff, deferring lease payments, and raising emergency funds. But every move added more weight to an already overloaded balance sheet. As global travel slowly began to recover in 2021 and 2022, another blow arrived. Fuel prices soared and inflation surged, especially in emerging markets. For GOL, still burdened with high debt and aging aircraft leases, these pressures were simply unsustainable. By the start of 2023, the company was trapped between enormous short-term debt repayments and impatient lessors demanding their dues. Chapter 11. Why a Brazilian airline filed in the US? You might be wondering, why would a Brazilian airline file for bankruptcy in the United States? The answer lies in global finance. Most of GOL's debt and leasing contracts were written under New York law, and many of its creditors were based in the US. The American bankruptcy system, through Chapter 11, offers a predictable and internationally recognized process for restructuring. In January 2024, GOL filed for Chapter 11 protection in New York, declaring roughly $2.7 billion in debt against $2.3 billion in assets. But this wasn't liquidation. It was a plan to reorganize. Under Chapter 11, GOL could keep flying while negotiating with creditors to reshape its obligations, cut costs, and secure fresh financing. It was, in essence, a controlled descent rather than a crash landing. The restructuring plan GOL's plan under Chapter 11 aimed to renegotiate aircraft leases, extend bond maturities, and possibly convert some debt into equity. The company also sought nearly $1 billion in debtor-in-possession financing, short-term loans that keep operations alive during bankruptcy. The focus was clear: stabilize operations, preserve jobs, and protect its most valuable routes within Brazil and South America. The management team also aimed to restore relationships with suppliers and passengers, assuring them that GOL flights would continue normally. This was not the company's first financial storm. In 2018, GOL had already gone through a smaller restructuring, but the 2024 Chapter 11 process marked its most ambitious attempt yet to reset and rebuild. Facing competition, LATAM and Azul. While GOL was busy negotiating in courtrooms, its competitors were gaining altitude. LATAM Airlines, the largest carrier in Latin America, had already gone through its own Chapter 11 process in 2020 and emerged stronger. GOL Airlines, another major Brazilian carrier, avoided bankruptcy altogether by successfully renegotiating leases. That left GOL in a tricky position, flying through turbulence while rivals cruised ahead. It faced not just financial pressure, but also reputational risk. Passengers often associate bankruptcy with uncertainty, and in aviation, confidence is everything. The numbers behind the struggle. By mid-2024, GOL's books revealed the full extent of the crisis. Its total debt had ballooned beyond $3.5 billion. The company's net worth had turned negative, meaning it owed more than it owned. Operating margins were razor-thin, squeezed by high fuel prices and a weakening Brazilian currency. Yet despite all of that, GOL continued to carry millions of passengers and maintain a dominant share of the domestic market. That resilience signaled that this wasn't a company facing extinction, it was one desperately trying to transform. The debt web, a huge part of GOL's restructuring, centered on managing relationships with its creditors, from aircraft lessors like AerCap and SMBC to international bondholders. Lessors were asked to accept reduced lease payments and extended contracts rather than risk repossessing planes they might struggle to reassign. Bondholders, on the other hand, faced the possibility of converting debt into ownership stakes in the reorganized company. To fund operations during bankruptcy, GOL secured nearly $1 billion in debtor-in-possession financing, led by Abra Group, the same investment group that controls Colombia's Avianca. Abra's involvement added a strategic layer, signaling an effort to eventually build a pan-Latin American airline network capable of competing with global giants. This financing was more than survival money. It represented a bet on the future of regional consolidation. Without it, GOL might have been forced to ground aircraft, a fatal blow to any airline. The broader impact on Brazil, GOL's struggles extend far beyond boardrooms and balance sheets. In Brazil, air travel is a lifeline connecting hundreds of cities across vast distances. When a major carrier like GOL falters, the ripple effects reach tourism, employment, fuel suppliers, and even regional development. Maintaining operations through Chapter 11 ensured that smaller cities did not lose critical connections to Brazil's business hubs. For the government, allowing GOL to restructure rather than collapse was not just a financial decision, it was an economic necessity. The rebuilding plan. GOL's recovery roadmap rests on three key strategies: simplifying operations, modernizing its fleet, and restoring customer trust. The airline is streamlining routes to focus on high-demand domestic and regional markets, while gradually phasing in more fuel-efficient Boeing 737 MAX aircraft to reduce operating costs. At the same time, GOL is investing in its brand image. Improved digital tools, loyalty programs, and service reliability are central to winning back passenger confidence. These steps may sound small, but in the hyper-competitive world of aviation, reputation can be as valuable as capital. Investor outlook. From an investor's perspective, GOL's restructuring creates both danger and opportunity. Current shareholders face dilution as new financing and debt conversions shift ownership, but new investors see a potential turnaround play: an airline with an established brand, a massive domestic footprint, and the chance to re-emerge with a healthier balance sheet. The airline industry is notoriously cyclical. Companies that endure downturns often rebound stronger when travel demand and profitability return. GOL's long-term fate will depend on whether management can translate this painful restructuring into genuine operational discipline. Lessons from GOL's fall. The first lesson is that growth without balance is risky. GOL's aggressive expansion, financed largely through debt, left it vulnerable when external shocks hit. The second lesson is that currency mismatches can quietly destroy profitability. Earning in local currency but owing in dollars exposes companies to risks that compound during global crises. And finally, restructuring isn't a failure, it's an evolution. LATAM and Avianca have both used Chapter 11 to reinvent themselves. Now GOL is proving that with the right plan, even deep financial distress can lead to renewal. The road ahead. The next year will determine GOL's future. If the restructuring succeeds, the airline could exit Chapter 11 by mid-2025 with lower debt and stronger finances. Its partnership with Abra Group could create a powerful regional alliance, giving GOL access to new markets and shared resources. Still, challenges remain. Rising fuel costs, competitive pricing, and customer perception will all test the airline's resilience. Yet optimism persists. Brazil's aviation market is expanding again, and GOL's low-cost DNA gives it a clear advantage if it can stabilize financially. The company's ticker symbol, GOL, once symbolized victory. If this turnaround works, it could once again represent triumph, not just for the airline, but for the entire concept of disciplined restructuring in Latin America. If you found this breakdown insightful, make sure to like, subscribe, and tap the notification bell so you don't miss more deep dives into business stories, market lessons, and real-world financial case studies. Until next time, stay curious, stay informed, and fly safe.